Hey there, business owners. Ever feel like tax laws are playing hard to get with fringe benefits? Well, hold on to your receipts because we've got some super money secrets that might just make your day. You know that little perk usually reserved for the hardworking 9-to-5 crew? Turns out, as the boss, you can savor that super money too. Whether you're a lone wolf entrepreneur or rocking the corporate scene. But here's the friendly heads up. It's not a free-for-all feast. The IRS has a nifty rule that says, hey, if you're chowing down on super money, you're an employee. Lucky for you, as the captain of your ship, you qualify whether your business is flying solo or cruising with partners. Now, before you go setting the table for one, here's a tip. While you technically fit the employee bill, it's best to share the supper love. Treat your team to some well-deserved bites if you want to avoid any raised eyebrows from the taxman. And here's the savvy part. When you and your crew burn the midnight oil together, proving the necessity of that overtime grub becomes a piece of cake. So grab a seat because it's time to turn the table on tax laws and enjoy a meal on the house. Your house. Ever wished for a win-win in the world of tax benefits? Well, feast your eyes on the Super Money Fringe benefit. A taste treat that not only provides you with your hardworking team with a tax-free meal, but also serves up a 50% tax deduction for you, the employer. Picture this. You and your employee are burning the midnight oil to conquer a task. You decide to toss $56 into the dinner pot for both of you. Now here's the magic. If you stick to the 4 rules we're about to spill, you get to deduct half of that $112 feast from your taxes. That's right, $56 goes back straight into your pocket. And the cherry on top, the entire $56 is a tax-free delight for both of you and your employee. It's like having your cake and eating it too, or in this case, having your dinner and saving on taxes. So let's dive into these 4 rules and turn those overtime efforts into a delicious tax advantage for everyone at the table. Hold on to your plates, because here's a bit of news that might make your supper a little less savory. Before the Tax Cuts and Jobs Act, TCJA, the Super Money Fringe benefit was a 100% deductible delight, a win for both the employer and the employee, right? But here's always the but. With this TCJA rolling in, the deduction joy took a bit of a nosedive. From tax years 2018 to 2025, the deduction was clipped to 50%, not as appetizing, but still a bite worth taking. Now, fast forward to the not-so-distant future, 2026. Brace yourself, because it gets worse. The TCJA decides to play the elimination card, wiping out all tax deductions for supper money. That's right, 0 deductions for your mealtime generosity. The silver lining, however, is that the supper money remains a tax-free treat for the employee. Unfortunately for the business, the deduction buffet is officially closed. So as you plan your future financial feasts, keep an eye on those changing tax tables, because what's on the menu today might not be as deductible tomorrow. Understanding the IRS definition of occasional is crucial. It means steering clear of routine and regularity. Here are key guidelines. Steer away from making the meal allowance a contractual right for employees to avoid violating the more than occasional rule. The determination of whether an allowance is occasional hinges on a case-by-case assessment, so flexibility is key. It's preferable for the allowance to be at the employer's discretion rather than rigidly formalized in a company policy, injecting a dose of spontaneity. By adhering to these guidelines, you ensure that your approach aligns with the IRS vision of occasional, minimizing the risk of regulatory issues. Let's break down the rules of the Super Money Fringe benefit game. A game with 4 key conditions. First off, you've got to keep it occasional. This isn't an everyday affair, it's a special treat. Next, be reasonable with the cash splash. The amount you're throwing down for that meal should be sensible, nothing over the top. We're aiming for a fair and square deal. Now, here's where it gets interesting. That meal you're providing should be the fuel for overtime. If it's not helping the employee clock in those extra hours, it's not playing by the rules. Lastly, the golden rule. No counting hours. Don't base your benefit on the clock. Tossing in a fixed discretionary meal allowance like the cool $56 is the way to go. Skip the hourly calculations. It's a recipe for trouble. Now, let's talk consequences. If you break any of these 4 rules, it's not just a slap on the wrist. That supper money turns into a taxable compensation for your employee, complete with the whole withholding and payroll tax shindig. Cue the unhappy employee vibes. But here's the twist. The employer isn't off the hook. While compensation may get you 100% deduction, those payroll taxes still come knocking. So it's a bit of tightrope walk. Play by the rules, keep everyone happy, and let the deductions roll in without any unexpected tax surprises. When it comes to dishing out meal employances to your employees, the IRS isn't playing the penny pinching game. There's no upper dollar limit on the amount you can hand over. It just needs to be wrapped in the cloak of reasonableness. Now, what's reasonable? Well, that depends on the circumstances. Picture to this. Your office is surrounded by swanky, high-end restaurants where even a salad can cost a small fortune. In a scenario like that, a more generous meal allowance becomes the order of the day. You want to make sure your employees can actually afford to fill their plates. Here's a pro tip. Consider what's normal in your workplace or the area of the city you're in. If you can justify the expense of the fancy dinner on a receipt, you're golden. Imagine an IRS agent strolling into your business, eyeing that receipt. Could you confidently explain why that meal was a necessity? If the answer is a resounding yes, you're on the right track. So go ahead, be reasonable, let your employees enjoy a meal that satisfies both their hunger and your financial conscience. It's a win-win in the world of meal allowances. Navigating the meal allowance terrain for overtime work, here's the lowdown. According to the IRS, the meal allowance should serve its purpose by enabling you and your employee to tackle those extra hours. It's straightforward when the employee grabs a bite during the overtime hustle. But what if the clock strikes after the workday? The IRS doesn't dive into the specifics here, except to emphasize that the meal money should enable overtime work. It's like providing the tools for the job. Now, here's where it gets interesting. Once you hand over the meal money, the ball is in your employee's court. You can't micromanage the dining decisions. While the expectation is that they'll use the money for a meal, you can't control whether it's a late night feast or an early morning bite. Speaking of early morning, the IRS has a broad definition of overtime. It's not just about burning the midnight oil. Any extension of the regular work schedule, even in the morning, can qualify. So whether it's dawn or dusk, as long as the meal money sets the stage for overtime work, you're in the clear. So provide the meal money with the expectation of fueling overtime. Trust your employees to make wise meal choices and keep the work momentum going, no matter the hour. Great news for equality at the dinner table. When it comes to supper money benefit, there's no discrimination rules to hem you in. You're free to extend this perk to any and all of your employees, from the officers holding the fort to the highly compensated stars. However, here's a friendly reminder. The IRS takes a closer look on an employee-by-employee basis. So if you're showering one particular team member with supper money too frequently, the IRS might raise an eyebrow. The key is keeping it occasional. Think of it like seasoning a dish just right. If the meal's becoming a bit too regular for a single employee, the IRS might deem them not so occasional and slap the taxable label on them for that person. In a nutshell, spread the supper money love among your team, keep it occasional, and you'll avoid any unwanted tax seasoning on those tasty benefits. It's a win-win for everyone at the table. The supper money benefit. Here's the deal. You can provide a supper money benefit to grease the wheels and keep those late night warriors fueled up. The sweetener, your business snags a 50% deduction on the cost, and you and your employees enjoy the benefit tax-free. Now, who doesn't love a win-win? To dish out this benefit seamlessly, remember to stick to the 4 golden rules. Number 1, keep it occasional. This isn't an everyday feast. Number 2, be reasonable with the spend. No caviar and gold-plated utensils, just a sensible meal allowance. Number 3, ensure the meal or allowance is the superhero cape for overtime work. It's all about powering through beyond regular hours. Number 4, skip the hour counting game. A fixed non-hourly meal benefit like a champ. So, the next time the hour mountain looms, consider the supper money benefit as your secret weapon. It's a tax-savvy, morale-boosting move that turns late nights into a team-powered feast. Bon appetit and tax deductions for all. That's it from here. See you then. Goodbye.